about what makes us different, where are we unique. So first, we are Untitled Chapter, and we offer a wide range of driver education services and products, including applying for your learners, acquiring exam and driving test materials, refresher courses, and your driving test preparation. So we're a cost competitive institution, and we're currently operating in Kingston and St. Andrew and St. Catherine, with plans of expanding operations to all 14 parishes. So I think we expanded to St. Catherine about 10 or 11 weeks ago, and we're mainly operating in Portmore, St. Spanish Town, and its surrounding communities. So before I mentioned that we are cost competitive, and according to this diagram right here, it does prove that Mother Teresa Driving Academy is the driving school that offers the lowest cost for its packages. So as you can see, for these are some of the most popular driving schools across the island. And as you can see, most of their packages start at $2,500, right? Going down, most of them start at $2,500, even $2,900. And Mother Teresa's Driving Academy, our prices start at lowest $2,000, and we go up to the most $38,000. The other schools, they go up to $60,000, even $63,000. So we can really conclude from this diagram that we are one of the most low, we offer the lowest costs for our packages. So our packages, I'm just going to share the Christmas promotion that we're offering before I share the regular packages. So the first one is the starter package, and this includes your 10 automatic lessons and your free materials and support from our team. So this package used to be $12,000, and now it's $10,000. Same for the standard package, 10 standard lessons, you have your free materials and support. It went from $25,000 to $20,000. So that is a big decline in the price. And our Road Master package, which is 15 lessons, free materials, and support, it went from $22,000 to $20,000. This promotion is going to be valid until January 5th, 2021. And after January 5th, 2021, the ordinary packages, which I'm going to share with you now, the starter package, which is $12,000, this is for persons that are not students. 10 lessons, 10 automatic lessons, and your free materials, which include your road code, mechanical, and exam bank book. Now, the student edition is it's targeting all students as long as you come with your student ID, and we will give you this package if you are from a registered institution. And instead of paying $12,000, you would pay $12,000, you would pay $10,000, and you get the same thing: 10 automatic lessons, your free materials, which include your road code, mechanical, exam bank. And the duration of these lessons, it can go up to 1 hour for every lesson. And then we have our executive packages. So I'm just going to talk about the regular edition first. So these packages, they include pickups and drop-offs from your location. So if you're busy at work, we will come for you to do your driving classes. So this costs $28,000, and it includes 20 lessons, and you get your same free materials, and the duration is up to an hour. The difference with this executive package is that we only offer 10 lessons, but we do offer pickups and drop-offs for your lessons, and it goes up to 1 hour with your free materials listed here. Then we have our standard packages. We have a student edition for this package as well. If you're not a student, this one on the right applies to you. You pay $25,000 for manual 10 lessons and your free materials. With every package, you're supposed to get free materials, and it goes up to 1 hour, right? The student edition, I said before, you just come with your student ID to make us know that you are a student, and we will give you this package. And instead of paying $25,000, you would pay $24,000 for it. Includes the same thing: 10 manual lessons and your free materials, right? So this is our regular package, $20,000, and you have your automatic 20 lessons and your free materials. Our super pass package, this is the highest package we have, and it includes 20 lessons, free materials, which is your exam, road code, and mechanical booklet. And this lesson, unlike the rest, this one is 1 hour. So one lesson is equal to 1 hour, and that's $38,000, right? Yes, this is the, remember I was talking about the Roadmaster package before, how it was $22,000, it's now $20,000 because of the promotion. But after January 5th, you would pay $22,000. And if you're wondering what it includes your 15 lessons, and it's a blend of automatic and manual lessons and your free materials, right? So, if you don't have money to pay for the packages, you can also pay for individual lessons, one lesson or 5 lessons. So the cost for one lesson is almost $1,500, and this would last for 30 minutes. And 5 lessons would cost $7,000, which is another 30 minutes, right? We also offer materials which are made by our team, $2,500, and it includes your exam road code book and your exam question bank with over 500 question and answers. Night driving classes, we offer that as well. 3 lessons, 1 hour for each lesson, and the cost for that is $8,000. Besides driving classes, we also sell car accessories, car rentals, mock exam services, and clients also get 15% off their car purchase with car dealers only partnered with NCDA. And you can find all this information on our website. I know that if you are going to do your exam, you can rent a car for $4,000, a van for $6,000. If you need to renew your car fitness, we do that for you as well. You just sign up on our website. If you need your car sold, we do that for you. Sign up on our website at www.mtdrivingja.com. And the rest of the information is right here. And I forgot to mention, outside of driving classes, we also provide support. We have our MT job alerts group and our scholarship groups where we share job vacancies across the island and how to really apply for your scholarships. So we create materials such as resume tips, application letters, and I will share the link in the group in the chat as soon as possible. So to stay connected, you can follow us on our Twitter and Instagram page at MT Driving JA. You can like our Facebook page, Mother Theresa Driving Academy. Email us for any questions or concerns at mtdrivingja@gmail.com, and call or WhatsApp us at 876-537-5518. And if you follow us on our YouTube channel, Mother Theresa Driving Academy, we also offer information and guidance to applying for your learners and your driving exam from our past seminars. So you can find that information on our pages. I'm just going to stop sharing. Okay. So I'm going to get right into the seminar. So for today's stock marketing seminar, our speaker is David Rose. So David Rose is a final year chemistry student in the Faculty of Science and Technology. His financial milestones include winning the JSC's 2018 Young Investor Competition, being the 2-time winning coach of JSC's high school stock team, and being a lead speaker at JMMB's Elevate 2.0 session in January 2020. His significant experiences include internships with Victoria Mutual Wealth Management and Proven Wealth Limited. He is currently a business writer for the Jamaica Observer and acts as a private consultant to some listed companies. So I will now hand over to Mr. Rose.
Good afternoon, everyone. Sorry for not having a presentation ready at the moment. It's been a crazy week. That's the best way to say it. So you got a basic background of who I am, and I'll just go slow, explain, don't hesitate to ask me questions. Here to make you guys learn, basically. So what is investing? So you have saving, investing, and insurance. Saving is capital accumulation. Investing is capital growth, and income as insurance is capital protection. So the idea is that with savings, you're basically aiming to accrue more money over time, and investing has a defined objective. It varies for everybody in the sense that you're trying to fulfill a goal, which will in turn allow for your money to grow further. So what happens basically is that you have different mediums or ways in which one can invest. So for some persons, they start their own company, which is where they take the basic money and just start a company and just build up further from there. And then you have the financial securities, such as stocks, bonds, real estate, alternative investments, and repurchase agreements, and all those other financial assets that are available for persons to invest their money into potentially reap higher returns. Because the thing with investing, in general, there's no necessary guarantee return. So the principle is that your aim in investing is they're supposed to surpass a particular benchmark in mind. And for me, my benchmark is generally inflation. So when you think of inflation, you're thinking of the sustained increase in goods and prices over time. But to basically break that down in a simple perspective, over time, the cost of goods and services will go up as the general economy improves and different factors are at play, which will influence the increase in price of goods and services. So a Jamaican beef patty used to cost $80 in 2008. A $100 note could have bought you a beef patty and given you change, probably go home or whatever. Now beef patty costs $170. So although the patty itself has not necessarily undergone a radical shift over, call it a decade plus, the cost to produce the same unit of the same item has gone up overall though. So if you were to just have had that money in the bank over that period of time, the quote unquote term, which is purchasing power, would have diminished, meaning that you would have been able to only buy less for the buy less later on with the same unit of money. So even the person's always saying, just buy US dollars and just save it. That still doesn't necessarily help in one sense, because even if you're to just benefit of the evaluation of the Jamaican dollar, when you're ready to, as you would say, exit and collect your money in JMD terms, you collect it at the bank's buy draft rate or whichever seller's rate that you're going to negotiate with. So that is where it comes into the context that when persons always saying this buy US dollars and whatever to just, benefit of the valuation, only that a method of reducing risk. But at the same time, as not necessarily investing in a critical sense, because all you're just reducing your risk to the declining value of one currency, but you're still not necessarily accumulating more in terms of value over a longer period of time. So for most persons, yeah, which are really typically defined as retail investors, you and I and everybody else, we have to, as you would say, find instruments to grow money further. So the simplest one, which most persons would have access to, is certificate deposit. It's basically a fixed income instrument offered by a commercial bank, basically. So the idea is that so what happens is that the idea concept is that you leave your money with the bank for a particular time frame, and when you bank when your particular time frame, you're able to actually accrue a higher interest rate than your typical savings account. However, that overall rate is not necessarily as much significantly higher compared to the regular interest rate. So in Jamaica, most bank accounts offer interest rates below at 0.5% and below. And I tried this concept in the sense that I tried a 1 year certificate deposit, $2,000 at 1.85%, and I probably got like $20 more over just that time frame. And that was just me testing out the concept to understand how the return for a certificate deposit actually works. And you also have to remember that in the same certificate deposit, you deposit your money for the same 1 year time frame, when the interest will have been taxed as well by the government at a 15% rate. So when persons are saying, oh, I don't want to do this or that, for one, the purpose of money is to be spent. However, it doesn't need to be spent on a particular good or experience. It can be invested into some asset to generate more cash. As someone says, just get something, just get an asset and just keep acquiring more assets, which is basically the principle of investing in the sense that as you acquire more assets, you can generate more cash or increased value. You're able to derive greater returns than if you just have kept the cash in the bank by itself. The next typical one asset that our financial security that us retail investors could have already purchased is a unit trust. And you probably know the term as a mutual fund in America. So a mutual fund are technically the same in a sense, except that our interest is governed by a trust deed, and not all interests necessarily have, as what you'd call, derived payouts for investors, in the sense that they give dividends out to the holders of the unit trust. So in mutual funds, they get shares, and unit trusts, they get units. In Jamaica, Sagicor is currently the cheapest brokerage firm to open an unit trust account with at $500 Jamaican dollars. Now, a unit trust is basically just like how we have partner in Jamaica. Jamaica unit trust is a collective partner whereby a professional fund manager takes that money and invests into a particular asset class based on that overall unit trust setup in order to actually derive a greater gain. And when the time comes, say you want to actually, you have a particular need elsewhere, you could just sell units back to the fund manager and be paid back the current net asset value of that fund. So for context, last year, Sagicor's equity fund was around probably $70 for context. I can't remember that figure, but so $70 last year. And by the time end of the year, it was $100 basically. So if you had bought the minimum 500, that's about $70. That comes out to about probably seven units basically. Even in that circumstance, you'd have had basically $700 at the next time frame basically. So in that sense, you'd have earned more than 20-30% on your money without necessarily having to have done much significant work. There's some minor fees though still, but really and truly, that's just, as I said, another financial asset, and that's just the equity fund. So you have real estate funds, venture funds, diversified funds, money market funds, fixed income funds, and they all satisfy different purposes because they're classified on a different risk basis, meaning that you have some persons who are conservative, who don't like to take necessarily much risk, those who are moderate to like a balance of risk and, as you would say, some potential growth, and those who are aggressive who enjoy high risk. So basically, that's just another asset, basically, or financial security that a retail investor like me and you can actually access. And then you have stocks. And stocks is basically has the terms equity and so on. But the simplest definition, really and truly, to think of is a listed company and a recognized stock exchange. So in Jamaica, we have the Jamaica Stock Exchange. In Bahamas, we have the Bahamian International Securities Exchange. In Trinidad, the Trinidad and Tobago Stock Exchange, and so on and so forth. And it's basically a market whereby buyers and sellers negotiate to purchase ownership in different companies or different securities. So for context, anybody can go and become a shareholder of NCB by buying a unit of the company or a share in the company on the stock exchange. NCB shares price is currently $145. Last year around probably May, for context, so the difference between stocks and shares is that, okay, in context, when you refer to stocks, you're referring to the listed component of a company, meaning that the equity, the shares themselves are actually registered and listed on an exchange. So you can have a private company with shares, but then it's not necessarily stock. When you hear the term stock, it's typically referring to a security, which is listed as a stock exchange with an ISIN, which is an International Securities Identification Number. So NCB, FG, NCB Financial Group, Scotia Group, Sagicor, Creamy, all these other companies, they have a International Securities Identification Number. So they actually register and everything. You can have a private company, and as a LLC, limited liability company, you would have shares in the company, which will define the capital structure of that company. So that's the context in terms of the difference between shares and stock basically. So when you want to delve further, the idea with stocks is that even though it's the highest quote unquote form of risk, it also has the potential for the greatest reward. So when you buy a stock in a company, this is what you'd call a liquid asset or an investment security. So that means that if once there's a buyer on the market, you can sell that your shares in a company at any time and get your turnaround or your cash within 3 days, which is what you call a short turnaround time to access the cash. It's called a liquid asset because once the stock itself as buyers, you're always able to exit and get cash and do as you need. Real estate is typically another liquid asset because it can take probably up to probably 3 months at best, depending on how transaction goes for a real estate transaction to go through. But even then, stocks are still most, as you would say, easiest convertible form of a liquid asset. Cash is the most common, simply just because it's cash. When we talk about liquid assets, talking about is to convert to cash quickly, and that is why even for insurance companies and even banks, they have when they invest their money, they invest into assets that can convert to cash quickly in order to satisfy obligations and liabilities. So let us delve further. So in Jamaica, in order to open a bank account or a financial account at any financial institution, you'd have to have a TRN, proof of address, 2 character references, source of funds, and proof of income. So when we think about, basically, when we think further as it relates to even how to open the account, because persons even have difficulty to open the bank accounts in general. So your ID would just be like either a passport, a driver's license, a voter's ID. Some entities allow you to use your work ID depending on the company. It's here and it's a tax registration number. So your proof of address, that could be like a utility bill, a bank statement. And what I do from anybody who tends to want to open a stock account or a brokerage account or a bank account and doesn't necessarily have what you call a bill in their name or probably a bank statement, what I would do, I would just make a blank envelope with your name and address on the envelope, and which is the address, the post office actually stamp it to a date, which the entity could use to basically verify your address. So different types of investments. So money markets, venture capital, and so that's not necessarily different types of investments per se, but different asset classes in a sense. But I can get to that later shortly. So persons will be like, what about the proof of income? So for those who aren't in the financial system, we have something called KYC, which is basically know your customer. And it's a protocol that the banks are required to follow under the Proceeds of Crime Act, which is a law in Jamaica, to satisfy the legal requirement in order for you to open your account, which is why they have to, quote unquote, take so much information for you to open your account in the first place. It is very strenuous and tiring at times because it really and truly should be easier in other countries, but as I said, Jamaica is still relatively high risk for several reasons, but That's why you need to actually open your stock dash brokerage account. So how does one make money from stocks basically? So the simplest form of way to make money from stocks, from simplest context, is where you buy a stock at a low price and sell high. So for example, I read the other day, they had their APO, and the APO was $40 for small investors and $48.75 for like your farmers, your hotel workers, your essential workers, and $52 everybody else. Barita stock price ran up to, or I should say increased up to $98 on September 30, and it's currently trading at around $48. So when you do the math, and when you play it, you're already up 60% on your money, basically, in terms of the increased value of that stock as you owned. Now, please note, when you purchase stocks or any investment per se, you aren't necessarily getting interest, like in case of a bank account. And if you were to actually if you want to actually realize your gains, in the case where you actually want to get the cash in hand, you have to actually sell some of the units or some of the shares or the stock in the company in order to actually get the cash from that investment. However, stocks themselves can also be as collateral for a loan. So if you want to actually access a loan, probably a car loan or whatever, and your parents, say when your parents left like probably like $2 million worth of a Scotia or another stock, you could actually put that stock up as collateral to get a low interest rate in the form of a secured loan. So that's just an example of how you can actually use stocks to benefit you, even if you are to, the stock doesn't necessarily increase in value significantly over a particular time frame. And that's just one example of, as I said, so you buy low and sell high. So you know, but right at 48 for the APO, additional public offering. I guess into IPOs and spend everything else after. And you could have easily sold now at 83, 84 and realize those gains. So if you bought 1,000 units, which is $40,000, you'd have been able to sell back now at 84, which is basically $84,000 minus a little bit of fees. But you guys get a simple idea as to how you make money from stocks. So you buy low, sell high, and that's just one way. The other way is to dividends. So people are saying, I say about dividends. So dividends is the simplest term, is the company's profit paid to the shareholders of the company. So remember, that's at the beginning, once you buy a stock in a company, you become a shareholder in that company. And what the company will do is that they'll pay dividends, which is out of the company's profit, to shareholders. So before Barrick's APO, they declared a dividend of $2.12, which meant that if you were to own Barrick's stock by the record date, say you had 1,000 units, you'd have gotten $2,150 gross before you factor in the withholding tax in cash, or in this case, a check sent to your address, just for owning Barrick's stock. So for example, you have even for example, you have Scotia Group Jamaica, which is the parent company of Scotiabank in Jamaica. Since 2007, their dividends cumulatively over that time frame have paid for the value of the stock from at that time to now. So that's by owning the stock, you'd hold that stock, and continue getting dividends over that time frame, and you can do anything we don't want with that cash. People probably take that dividend and pay on part more on their loan, taking that money and investing more back into the stock. You can do whatever you want with it. There's no restriction. And yes, they can use an insurance policy as collateral for a loan, but not every insurance policy per se can be used as collateral for a loan. And it also applies to stocks in the sense that not all banks or brokers will take every stock as collateral. So those are the two simple ways as it relates to how you make money from stocks. Now, persons will be like, how can I choose a stock or whatever? So you can speak a licensed financial advisor, which I am not, but I understand enough in terms of finance and everything else. But what's happening? Well, the simple idea is that you want to find companies that are probably are performing well in the sense that they're generating more in net profits and income. Their balance sheet is strong, generating cash. Probably expanding to new markets. Those simple things are identified as what I would say, or what you can call indicators for a good company as a potential investment in perhaps to buy the stock. And let's say for some persons, you have some companies that are that's what you'd call mature, like a Carreras. So Carreras is a distributor and marketer of cigarettes in Jamaica. So the Craven A, the Matterhorn, Apollo, those cigarette brands you see, Carreras actually markets and distributes them in Jamaica. So Carreras stock price didn't necessarily move significantly. It doesn't really move. It's what we call a stable stock in terms of the price. However, on the flip side, Carreras as a company pays a lot in dividends. So for some simple math, when you hear the term dividend yield, it's talking about the company's total dividends paid for the 12 months with respect to its current stock price. So Carreras as a company typically has a dividend yield between 7 to 10%. So for context, if Carreras was to pay that 7 to 10% consistently every year, even here to factor in the withholding tax, within at best probably 7 to 12 years, you get back your cash or your money invested in Carreras, barring the overall stock price itself moving in that time frame. And that matters in the sense that for some persons, they are comfortable getting a dividend every quarter because by them, they're getting their cash. The stock is still, as I said, an asset that can be used as collateral of any other purpose. At the same time, the company is in a market where they don't have any competitors other than you, as you say, the legal market. Another company you can look at is even Jamaica Teas. So Jamaica Teas, even though the name implies that they make teas, for manufacturing teas, they also engage in the area of manufacturing homes. So as they did in Malapart, they developed an apartment complex, 21 apartment units. And then you also have the case where they actually have an investment arm where they invest in the stock market, not just locally, but internationally as well. And the company has a few other, and the company owns about, I think, 2 or 3 supermarkets as well. And I think I really see the tea business itself, which generates, as you said, the most cash and profits. 65% of their sales are in form of exports. So 35% is in Jamaica, but the rest of them, what they generate is hard currency from other countries. And that's good in the sense that the company is globally competitive and has reduced the risk to the Jamaican market. And the company, as I said, has grown significantly over the 10 years being a stock exchange. And they've already said they intend to potentially go to the main market to raise more capital. And as I said, the company stock price, I told my friend the other day, my good friend, I told her to check Carrera to get Jamaica teas at $5, and she sold on Thursday at $6.50, which I mean a 30% gain, and that was mainly driven by the company's good results recently, along with the company's stock split. So a stock split is simply where the company's stock price is potentially expensive and nobody wants to buy it past a particular price. So what happens in the case of Jamaica Teas, we have 3-to-1 stock split. If you had 1,000 units of Jamaica Teas at $6 for the 3-to-1 split, you now own 3,000 units, and the stock price will go down to $2 to reflect that the increased number of shares. So technically, your value of your ownership hasn't necessarily decreased. You just have more shares at a lower price. So it's vis-a-vis. And these are just some examples of companies that, from what I would say, basically provide services or value that persons are paying for and the company is deriving greater gains from. And even have Grayscale. Grayscale is a company that listed on the Jamaica Stock Exchange and Trinidad and Tobago Stock Exchange as well. And their company is not necessarily for their money, or I should say most of their profits don't come from food services. Most of Grace Kennedy's actual profits come from their money services business. So Western Union, Bill Express, those divisions, that's where they get most of their money. And the minimum age to actually open a brokerage account is 18. However, if you're under 18, you could have a guardian open a joint or custodial account with you. So, and then when you turn 18, you could become the primary owner. As I said, there's no restriction as to what minimum age you can start investing in stocks. You have some parents who actually open accounts for their kids from they're young. When the kids get older, they explain to them how to invest and so on. And the kids to the parents which they want to buy for them to buy for them. And yeah, the parents just put the order in for them to get a particular stock. So there's a minimum age to invest in, but there's a minimum age to open a brokerage account, which is 18. Same for a bank account, which is 18 as well. And here's how much money you can start with. It depends on the broker themselves. So there are 13 licensed brokers in Jamaica in which you can actually open a brokerage account with. However, Mayberry Investments, GK Capital Management, and Scotia Investments require a minimum of $500,000 Jamaican to open a brokerage account with them. And that's because their client base is more targeted towards the high net worth base of Jamaicans. However, you have brokers like Proven, Sagicor, JMB, and others require less than $10,000. And apart from those three brokers I listed initially, most brokerage firms require $50,000 and less in order to open a brokerage account with them. So as I said, I have low-cost brokers which take, I guess I would say, the retail investors' money and allow for them to actually participate in the market. And for those persons who are actually NCB Jamaica, NCB bank clients, you can actually open an NCB Capital Markets account online just by virtue of being an NCB Jamaica client. So you can check that out online and actually contact your bank or if anything. But yeah, you can actually put a brokerage account in NCB Capital Markets if you're already an NCB bank client online. So when somebody asked earlier about JTrader Pro, which is basically an online platform which allows for you to actually, which is owned by the JS, which allows for you to actually buy and sell stocks and see what you'd call the queue of the market, of the stocks on the market. So the way in which stock prices move is based on supply and demand. If there is a lot of supply and enough demand, the price cannot increase past a point or probably will go down. If there's a lot of demand and no supply, the price naturally tends to increase. So what those persons are saying, what does that mean? So currently, for context, look at even the current, if you go to downtown right now, are you going to go buy vegetables and fruits? Because of the recent rains, the supply of fruits and vegetables has gone down, but the demand itself has not shifted. As a result, the vendors in downtown who actually want to generate more income, the farmers who are selling it to the vendors are going to charge them more, and the vendors are going to pass the same prices on back to the regular person just because there is less supply, same demand, and persons are willing to pay for it as well. Same thing with the stock market. So if a company reaches great results and persons are buying the stock and supply is decreasing relatively, then the price goes up as well. Your company posts bad results, or there was an event that investors didn't like, something was deferred, then the stock price can go down based on those different events. However, a stock price going down isn't a bad thing in the sense that if it's a great company, you can always buy more of the same company and lower your average cost for purchasing that company's stock. And that's good in the sense that when the stock price eventually rises again, you benefit from actually having bought that stock at a cheaper price. So someone actually asked me earlier about different types of investments. And in for context, so you have assets in general, you have financial securities, and then you have what you'd call something called tangible or real assets. So like real estate, some persons actually buying generators to rent out to parties. Those will be your tangible assets. Your financial assets, will like probably your cash in your bank account, your basically uh, your stocks, your bonds, your purchase agreements. Those are your financial assets. I referred to venture capital a while ago. That's what you'd call one way in which one can invest into a company at their particular stage of growth. I won't get too deep into it. I don't want anybody to get confused. But when I reference, so to remind everybody again, you have certificate deposits at the commercial bank. You have interest with brokerage firms, like some of the ones I mentioned earlier. You have stocks, you have repurchase agreements, and you have a myriad of other other options to actually invest. And the thing is, you're not necessarily restricted from some countries on where you can invest. So right now I'm actually investing in Canada and the United States through two Interactive Brokers and TD Ameritrade. And it's US dollars and Canadian dollars I have to use, but even then, in that case, I still can invest in those markets. So there's no restriction per se as to where you can invest, guys. So you don't have to invest only in Jamaica. It's a globalized world right now. So first I'm asking what do you consider when I consider purchasing a stock? So I consider firstly, is the company liquid? Meaning that I should say the stock liquid. So when I refer to that, is the stock frequently traded? Is there a potential interest or person to actually buy the stock later in the future? Because here's the thing about it. Say you buy a stock at $20 and it's in for $30 right now as the closing market price. So suppose you actually want to sell the stock and realize the gains, but the best bid or the best price for someone willing to pay for the stock is $27. Then you can only realize the gains $27 versus at 30. And you have some stocks that will probably trade for not even once or twice a week, probably not even for months. So that's the first thing I look for in terms of when considering a stock. Like, is the stock liquid? Is it frequently traded? Just because I want to know that I'm ready to sell. Can I sell it? And I do have to sell. Is there someone who is willing to buy the volume of units I have? The next thing is, what does the company do? Why does it matter? Because it doesn't make sense for you to consider it a palace amusement. And this is advised in the environment where 2 theaters are currently not on operation and the two are struggling and their Kingston theater isn't doing as hot either. Say, for example, Separate right now in the current environment. Separate is a manufacturer distributor. Separate manufactures, or I should say, produces oil, the regular cooking oil, the Ovaltine snacks. In the sugar business, they're doing dairy right now. They also distribute pharmaceuticals. They distribute other goods. And right there in COVID, they're benefiting significantly from their distribution and manufacturing business because what has happened is that more persons are staying at home, more persons are consuming more. So in that case, they are benefiting from the current COVID environment. Even Mailpack. Mailpack is really actually a logistics entity with several other operations. So they basically do order package in the US, it goes to the address in Florida, and then bring to Jamaica. And this is an oversimplified version of what the companies do. And the reason why that matters is because, as I said, if the environment for the company changes, then it can be a problem for the company if they can't pivot quickly enough. The next thing is, sorry about that. What does a company actually do for money? So when I say a company can do a particular line of business, but it's not necessarily what actually generates them their money. So somebody is like, wait, what does that mean? So I mentioned it earlier. So Grace Kennedy, about 80 or 70 to 80% of their revenue is derived from their food trading business. However, about 35 and it was up to 50% last year was generated from their money services division. As I said, Western Union, Bill Express, FX Trader. So that division generates the most of the company's profits, which are used to pay shareholders dividends and so on. The food trading business has a very low margin in the sense that the net profit margin for the food business is less than 10%, while for the money services business is as high as 30%. They also their banking and investments arm, which is FGB and GK Capital Management and GK Investments, and you have the insurance arm or the insurance segment, which is like Key Insurance, GK General Insurance, Canopy Insurance. So even though we know what the company does, how did they make the money? I pointed a while ago for GK, it's really in the area of the money service that generates most of their money. So like remittances are going up right now, and they have the largest remittance network in Jamaica. Then that's just how they're end up generating more money right now from their money services business. The next thing is the environment. So for context, you can compare a bank and a commercial bank and a microfinance institution in the same space. Reason being, a bank has 5 different regulations compared to, say, a microfinancier. And you're saying, wait, what does that mean? So, for a microfinancier, they can literally charge clients some extreme rates. They aren't necessarily as regulated compared to the commercial bank. Commercial bank has to put in particular restrictions on how much money they can lend and how much money they can keep at any given time. So those little minor things, and comparing a commercial bank against a bakery. So those are the small little things that I'm talking about, the environment. At the same time, to go even further, to break down even further, look at even where the company generates money. So I mentioned Jamaica Teas earlier. So Jamaica Teas operates not just in Jamaica, but I said outside the country and so on. And for persons are wondering, for example, even with NCB Financial Group. So NCB Financial Group is actually a group of 3 major companies: NCB Jamaica, which is the bank and its subsidiaries; Guardian Holdings. Guardian Holdings is basically the parent of Guardian Life here in Jamaica and GK Guardian General Insurance. And then you also have Clarion Bank, which is a St. Lucian bank, a Bermudian bank that actually engages in banking services like NCB Bank as well, but in their case, it's in Bermuda with a different engagement or focus. So to go further, those are the key things I look out for and looking at a company. And you'll be like, why do all these things matter? As you can see right now from COVID, and persons would have neglected some of these quote unquote simple things, so they've come back to haunt them, because what would have happened is that when COVID really came down and hit some companies had to go and get loans, some companies couldn't operate, and so on. Which have been a significant problem because some of them couldn't generate dividends, some of them couldn't have paid out to shareholders, some of them had to take out extra loans to support the business. And you gotta get in the context, right? So these simple things would have at least guided me in knowing that, all right, when COVID came, I need to scale down in some companies, probably need to scale up. And that's just because I knew that the environment is going to change, and I had to be ready to actually have my capital ready to deploy some companies which are significantly oversold. So currently in COVID, so because of COVID, there's some companies which are selling at a steep discount compared to last year. where the businesses have expanded. I want to say specific companies right now, but at least you guys understand the context I'm coming from in relation to, each company. I never look at a company in isolation in the sense that one is more expensive than the other, because I saw some persons end up missing out on NCB and other companies just because they're using the price as a mental metric of quote unquote success. So what does that mean? So our good old friend NCB, when I started investing, was selling for $35. NCB just has $225 last year before COVID came. Now, instead of having all nice and fun to say, NCB wouldn't have gone to $70, nobody going back to $90, and so on and so forth. But as I said, demand and supply. There's somebody who's willing to pay for it, and there's somebody's willing to buy, somebody's willing to sell it. I remember buying NCB FG at $142 back in April 2019, and I was able to sell it in September 2019 at $212, which would have been a great return for me. And if I had just said, oh, I'm not going to buy the stock because the quote unquote price is expensive, I'd have missed an opportunity. And at the time, I bought NCB because the Guardian deal had gone through, which was for them to actually gain, as you would say, the controlling stake in Guardian Holdings. And because of that, as you see there, was gains. So I think I kind of close off right here and just going to the question segment for you guys to actually ask me questions right now. But I hope you guys at least understood better. And if you need me to drop any questions or anything in the chat, I can do that. I'll leave my email in there as well.
Thank you, Mr. Rose, with this presentation. Does anyone have any other questions? Just going to open the floor for any questions now.